Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to do is take a look at the equity markets. Here we are as we're moving into September. Equity markets pretty much digesting the gains they made in August, but actually they're a little bit stalling, and it does appear to be some selling pressure developing. So one just needs to be cognizant of it, meaning we have, over the past 5 weeks, we have 3 days of heavier volume selling on the S&P and the Nasdaq. And if this developed, we started to see 5 or 6 days, I'd get really worried and the market may enter into a correction. But thus far, the uptrend is still intact. Now, the S&P keeps bouncing around between 1980 and 2000. Seems to have trouble getting over that 2000 level, and that's maybe what it would need to do so this uptrend can continue. And also on the low sides between 1972 to 1950, needs to hold those levels. If it breaks down through there, the market may indeed start to correct. Now the Nasdaq, this morning it's below the 45 level, which was one of the areas of support. They had trouble getting above the $4,600 level, also moving sideways. But this morning, actually, the Nasdaq's getting hit pretty hard across the board. And again, the volume's swelling. So not unless things improve, this may give it a forward distribution day. Now, the levels we're watching on NASDAQ, if it can hold the 4,500 to the 4,485, a further break below those levels may indeed say we're going in a correction. The Dow seems to just be moving sideways, hovering around that 17,000 level. And actually, the Dow transports are at their highs, so that's looking pretty good. And again, the other index that's looking pretty bad, and has been for a while, it's been kind of leading the market down, has been the Russell 2000 Small Cap Index. So kind of keep an eye on those, a little bit of caution in the air. Now, one of the sectors that started doing very well, which was kind of lagging the general market, has been the financial sector. If you look at the XLF, it's just slightly off its highs. And last week, towards the end of the week, when a lot of the growth stocks were getting hit, the big banks were starting to act very well, and some of the brokerages were acting very well. So let's talk about those. We caught 2 stocks that were breaking out between last Wednesday and Friday, and one of them was Charles Schwab. That symbol is SCHW. And basically, it was moving past a 29.16 pivot, and on Wednesday, the volume swelled to about 41% higher than average, and on Friday, it swelled to about 67% above average as it took out that pivot point. It's still viable in this range as a trade. I wouldn't chase it past 30.60, and of course, I'd probably put a stop in below it at about 28. Another brokerage that also was breaking out last week was Interactive Brokers, symbol IBKR. It took out the 24.50 pivot, so it's near that area now. I wouldn't chase it past 25.60, and on the downside, I'd put a stop right about 23.30. Now, both these are interesting because they've been basically basing all year long, just moving sideways in a pretty tight flat base. And then last week, when the rest of the market wasn't looking so good, both of these showed some strength, as did the other financials. So you might want to take a look at those. But as always, the price and volume be your guide. Consult your financial advisor. This is a trade for you. And this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Good luck trading.